Welcome to Impact Investing, brought to you by the Supporters Fund. From one of the largest producers of beer, 2,000 brands, waffles, and chocolate, with the airport selling the most chocolate in the world, Brussels, Belgium. I'm your host, Jeffery J.P. Potvin, and let's please welcome from the city with 10 million trees, Toronto, Canada, Peter Paul Van Hoeken at FrontFundr. Welcome, Peter Paul. It's a real pleasure having you join us today.
Thanks, Jeffrey. It's great to be here today with you.
I'm excited to have this conversation with you because of all the things that we get to do in the investment world, it's very rare that you get the opportunity to kind of blaze a whole new path and create something completely different that just threw everybody over the bridge of saying, I don't understand how this is going to possibly work. And everybody with all their doubts, and you came through and been able to produce such a great quality product. So I'm excited to dive into that. And we're going to do that in a second. But the way we like to kick off our show and the way we like to start is we want to have you share a little bit about your background and one thing about you that nobody would know.
Okay, so let's start with a bit of my background. So actually, an ex-banker. I worked in the banking world for quite a while, back in the Netherlands. For quite a while, it's about 9 years, and did all sorts of exciting things. And I've always been intrigued with finance and investment. So that was a great experience. But at some point, I thought, I kind of seen it, done it, and I want to move on and I guess more down the entrepreneurial path. So that coincided with actually moving to Canada. So immigrating to Canada in 2010 with my family, my wife, my two daughters. Landed in Vancouver and basically started all over again. Started from scratch really, and we'll get to that of course later. But that was really the period where the whole idea about FrontFundr and hey, how can we advance this sort of originated, because I was working with companies to help them raise capital and experienced how challenging that is. So I'm intrigued with finance and investment, particularly with the opportunity to, of course, innovate it, because we all know how an established, let's say, industry that is definitely ready and I think needed for innovation. So yeah, that was my sort of calling to be part of that. Something nobody knows, or at least just a few people, and perhaps not many people would expect, is that I do like to be outside. I love to exercise and run and all of that. But what I really enjoyed, and unfortunately I don't have enough time for it, hence that I still I would say and just off beginner, but I do love being on the water, and I actually like kite surfing, which is spectacular. But it's also something that I still need to learn. But I love to be on the water.
That's awesome. Uh, Being an outdoorsman, water and being able to get outside, I think, is by far the best in the world. I think that uh, anything I've learned about travel and going through different countries is that it is so crucial inside of major cities when they have large bodies of water flowing through them. It
Yeah.
changes the personality of the city, it changes the personality of the people. Just that water flow, it is incredible. And it makes such a difference. They're doing a lot of research on this now and trying to prove how much this actually changes the mood of people, shifts the energy, and makes everybody stronger and better. So it's a pretty incredible space. So I'm a big fan of that. And I think that's phenomenal that you get that opportunity and you work with that.
Yeah, and
So
on just that note, Jeffrey, because you talked about Belgium chocolate, and I believe all of you are saying there, but uh, can I return that question? Is there something nobody knows about you?
oh well, geez. About myself. Well, I appreciate that, and you're putting me on the spot, so I'm not sure what the if I have the crazy unique thing, but I can say that um, maybe because you're being that I'm in Brussels and I'm in Belgium, I can say that in my time, I've spent a lot of time traveling, and I'm a really enjoy getting into a lot of adventures, and I can say that I'm working towards being close to 100 countries that I have traveled to, and I'm a
Wow.
big fan. I'm a huge fan of the opportunity that has been in front of me, and the fact that I get to meet investors around the world and startups. But just being able to be part of these cities, you learn a lot about travel and the ways to maneuver and work your way through cities, countrysides, mountains, all of those things, and it's pretty phenomenal. And if I sat down, I could probably give everybody a breakdown of how sleeping on a couch to an Airbnb to a hotel to all of these things all operate and they all work together in that world of allowing people to be mobile, and it's pretty fascinating. So yeah, I guess I could build a few opinions off of it, but maybe that's my interesting fact.
After 100 country visits, I would think so. That's a lot. I mean, that's
It
more than half
is.
the countries in the world, isn't it?
It's
Or
pretty
actually, not.
close. It's pretty close. Yeah, it depends on if you're using the US breakdown. It's 197, if I think it is between 195 and 204, I think is the total number.
Yeah,
And it depends on who is deciding which one is a country versus who's deciding if it's not. So
right.
I think that's what gives me the gap of an extra 5 countries if I'm over or under 100 based on that.
Yeah, spectacular.
It is. It is. Well, now taking this background that you've built up, and you could say anybody can go and create these startup companies and they can push their way through and help change regulations and everything. But I'm going to say when it comes to finance, it's a lot trickier than that. People are in business to make money. People are always trying to control their space, and they don't want to have incumbents coming in and changing their world and saying, I can do something now that you were protecting and not allowing anybody. And it's kind of like the real estate world where they've built these contracts to control and manage everything as tightly as they possibly can. And there's always incumbents trying to get in, and it's a very tough space. And I find finance, legal, all of these spaces that have been around a very long time, it's a very tough maneuver inside of these spaces from the regulations and governance all the way through. So, taking your background working in the past when you're working as a consultant, and then I noticed that throughout your career, you're always part of different groups, that you were really trying to push the envelope on what it takes to be in the fintech world. And I think that that really makes a big difference that I wanted to kind of really push behind, because I think sometimes we forget when we're starting a company, we just think we can jump into it and that everybody's going to appreciate us, love us because we're changing the world. But we're not working our way slowly in there. So there's a lot of groups that you're part of, and we'll talk to those in a second. But to start off, there's the management side in the finance space. What were kind of some of the things that you learned as you were working towards where you are today that really kind of gravitated to how you wanted to work with these startups? Because it's pretty crucial that one, you're getting into deep dives, you're learning about the companies, but you had to learn all of that before you got into this space so that you could be highly effective and efficient at finding the right companies to invest in. So where was that learning then? Where did it come from? And what are some of the top things that you would say, make sure you understand these things before you dive into any industry or any vertical?
Yeah, and Jeffrey, just to pick up on your point about doing something new, and certainly if you sort of push the boundaries, and you're absolutely right. In the finance and investing industry is heavily regulated, and there are reasons for that too. I mean, whether we agree with all of that and how it's going, we'll get back to it later. But I do understand that it's needed, and so to my experience actually back in my banking time is I'm kind of intrigued by finance and investing, and of course in my banking time I experienced really on the large level. I didn't work with startups at that time, but I was working in an industry, and obviously laid a sort of a strong foundation about the industry and about the actual funding and investing and lending on the larger scale. It was the time that I also experienced. Well, it's a very let's say opaque industry. It's a very let's say a relatively small or in crowd industry, if you like, with great professionals, also lots of jargon, lots of it's not necessarily that transparent and open, and so I. That as I worked longer in the banking industry, felt like yeah, I like this. I did all sorts of exciting things, but I was ready to sort of deploy that in a different way, more in an entrepreneurial way. And so I think that experience, Jeffrey, in banking was particularly formed me in terms of how can we do that differently? You know, how can we make it also sort of simplify and make it accessible? And that of course coincided with myself going down the entrepreneurial path with FrontFundr, which of course also started as a startup and is still a startup or scale up, right? But so that time was really like, hey, I feel like things can be done different. And then when you spend time in banking from the inside, I think it's a great opportunity actually to experience that and to also learn and get ideas on how you would like to do that differently. And so with regards to your point on of course later on companies, how do you screen those companies? I mean, they're typically earlier stage companies. They're very limited track record. I remember when I worked for the bank, you look at the history of financials, you look at complex balance sheet with the P&Ls. Well, startups, some of them have very limited or no history, right? So you go often for, of course, who's the team, who's driving it, you know, how did they think it through, you know, and so there are of course other aspects you look at to screen these companies, and of course in the meantime I've got a great team to help me with that. But particular point I'd like to reiterate on in my experience in banking, really that's where I thought, hey, I think things can go different can be done differently, and that combined with my desire to uh, go down the entrepreneurial path to build something new in this industry, yeah, that's sort of was for me. Those were strong drivers.
Which is, I think, the best way to kind of make that leap forward is take the learning that you've built up over the years and then utilize that as the firepower for you to make those big changes. But you also know that these changes are going to take time. So they weren't just something that randomly falls in front of you and the change happens in 5 minutes. It's something that's taken a lot of time. The business is now on its 10th year. So congratulations on that. That's pretty exciting. And when you take that 10 years of knowledge plus the 10 years prior that you were building up while you were working for different groups and working in the financial space, is there, you kind of mentioned that your whole goal was to simplify everything. And I think really FrontFundr has achieved that simplified version of it. And you're starting to see more platforms that are coming out to simplify the legal and accounting. So there are things that are starting to really try to hone in on that simplification, on helping a startup move from A, B, and C and do that quicker. So when you take a look at where you are today and what you've accomplished over that time period of working your company through the regulations, are there a couple of pieces that you thought you may not have got through, that just the regulations were very stringent, they didn't want to change, and you really had to take a lot of effort earlier on to convince them that this was something that public investors really want to have access to?
Absolutely, there have been those times, and and when you say like, and you're right, you know, I incorporated the company in 2014, and so yeah, so we're in our 10th years, which almost is sort of scary to hear, uh, because it has been a time, and I think Jeffrey, or our experience certainly in the beginning. So when I had this idea, this was when after I spent 3 years in Canada, so I moved to Canada in 2010, and then I started, as mentioned, working with companies, and I recognized the opportunity, like, oh, it's challenging to raise capital. They're also going to this small group of usual suspects. What if you can expand that group? And what if you use technology to leverage that? And of course, I didn't invent this. This started actually in 2010 in the UK. That was one of the first countries actually investment crowdfunding started. And I was intrigued what was happening there. That totally sort of fit in my whole idea of, like, hey, this is in finance investing, but this is innovative, this is refreshing, this is accessible for everyone. And indeed, there are ways to simplify it and make it accessible and easier to understand. So I literally, wrote a letter in 2000, end of 2014, to the securities regulator in BC. So I landed in Vancouver in 2010, and I said, look, I think it's a great idea. This opens it up. It unlocks, an entirely new pool of capital from the public that could be invested in startups. I need some guidance on how to do this because, of course, this is a regulated environment, and again, there are reasons for that, which I recognize and agree with. But I was aware that, hey, this is going to take quite some effort to do. So that's when it all started, and it became clear that to do this, I had to become registered. I had to become a so-called exempt market dealer. So you're literally go through a whole process to get registered. and then you supervise by Canadian securities regulators. And I often say, in Canada we're blessed with 13 securities regulators. Each province, jurisdiction has their own regulator, pretty much. So, but obviously, it creates a lot of complexities, right? So at that time, I was also I spoke with people that, of course, have been in Canada much longer and in the industry, and I was mentioning this idea to them, and I sometimes get a smile on their face and said, yeah, that's cool, and but they were kind of saying, good luck with that, So and maybe it was like I was still relatively new in Canada. I was very keen to do this because I just really strongly believe in it. Gave me a lot of energy to go through these hoops with the regulators. But yeah, it's been a tough journey. And even to get to that first point, Jeffrey, of getting a registered exempt market dealer purely to transact online, which was a novelty at that time. That in itself was a big milestone. And I wouldn't I wouldn't even I wasn't even of course sure that I would get that approval, which I did, and then I rolled it out to other provinces. But it's important to note there. This was 2000. I got that approved in 2015. Now it's important to recognize that at that time, everybody was basically sort of in the dark on this whole phenomenon of investment crowdfunding and opening it up, including the regulators. There were no rules in place. The only reason why I thought, hey, there's potential is because there was a rule that enables. It's been a long time around for a long time actually. Enables companies to raise from the public. It's a so-called offering memorandum rule. I won't go into all the details, but it was there and existed. I thought, hey, that's great. I can use this actually because by using that rule, you can raise from both accredited wealthy investors as well as smaller retail investors. The only problem is for this offering memorandum, you need to go through a lot of hoops. You need all the financial statements. You need this whole document. So for many companies, startups particularly, it's a bridge too far. So it's good to again to realize that at that time, I guess I initiated, let's say, a party that definitely hadn't started yet. There was nobody there, and nobody was actually even true that it even convinced it was going anywhere, right? So, and that I think is also the reason that it has taken significant time to get through these hoops and get registered across the country, and actually pull all these parts of FrontFundr the puzzle together. And on that note, just so it gives you an idea on how long that took. In Canada, we have harmonized crowdfunding rules only since 2021, September 2021. I remember very well. That's only a few years ago. So only then. So there were some rules prior to that, but it was sort of fragmented across the country, which really made it very difficult. But only in 2021 we have these harmonized rules finally in place that enable startups to more easily raise capital from the public. So yeah, it has been a bumpy bumpy road for sure.
Well, it's incredible because you could have at any point in time walked away from this objective, which was to simplify investing. And I think in one of the podcasts or something I had read on yourself, and when you first were talking about it, the excitement level that you had from your TED talk and all the things that you've done about kind of talking, pushing out the value of why this is important. And you mentioned that you've got retail investors, which are people who use the product and they're just someone at home. And you gave a great example of in the past where people that had put some money into a crowdfunding opportunity got the product, and 2 years later the eyewear product sold for a couple billion, and there was a huge gap there because there could have been an opportunity for those dollars to cross over to those people if they were treated as investors instead of just someone buying an early stage product. And I think that that's kind of the idea behind it. It still is that way today. But when you look at what you've now been approved and being able to create this unified and harmonized ruling, do you find that there's still a lot more to go for you as a business in order to crack and open up this market for retail investors as well as for high net worth and everybody else to be able to come into this one platform or into what you're trying to achieve? Is there something that we haven't hit there yet, but we're still hitting roadblocks? And the ideal place that we need to be as an investment group is here X, whatever that is. Do you know what that is, and do you see that there's an avenue to get there?
Yeah, and that's a great question, Jeffrey, because we talked about regulation, which is a key part because it's industry strongly regulated. So that's an important factor. But let's indeed move on to other factors, because it's not just about regulation. I mean, this is also that I've been, you know, that's been a big job, is that if you're the first mover, and we were the first mover with FrontFundr in Canada. You also have to, of course, you have to remove barriers, as we discussed, but you also have to promote this whole phenomenon of the fact that companies, startups can actually raise from the public, as well as on the investor side. You actually have to explain that, hey, you can actually invest in startups, and you don't need to be an angel investor or a dragon on Dragon's Den or a VC. It could be anyone could really invest, because you can invest for such relatively small amount. So the level of advocating and education in this whole new investment crowdfunding, investing in startups from the very beginning, that's been a major task as well. And that's another key factor that has taken time. And and uh, 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 so and that's still a big job. I would say, Jeffrey, that in Canada, investment crowdfunding is still in its infancy. It's still uh, it's still in the early stages. So I do see now, and in fact, if you compare to the UK, we spoke about it previously a bit, where it started about 5 years earlier. We launched in 2015. The first platforms in the UK launched in 2010. By now in the UK, it's basically went sort of mainstream. About 40% of companies use FrontFundr like platforms to fully raise, seed capital, or growth capital, even on the way to Series A rounds. 40% uses platforms fully, or as an additional channel to raise capital. So that's kind of where this is going, and of course, on the investor side, it has also become more familiar. That people are aware of. Yeah, actually, you can invest in these startups. So I think that whole building the market, that advocating and education around it, is still a major task. And I would say we haven't even really scratched the surface yet, to be honest.
With the addition, I guess, to where the market is kind of fighting itself right now, where you have to spend a lot of money in order to gain in the interest from the user. Is there somewhere in here where government steps in and starts to say, you know what, this is part of the regulations, part of it. We're going to start providing dollars into the marketing because we want this to be more broad strokes. We want more financial institutions to start using FrontFundr. Like, are there other avenues that start to support the model because you have been the early adapter to all of this? So, do they start to adapt and provide dollars in that start to support this because they see that this is bringing a lot better governance and a better structure to the overall investment side of this, to the angels or Series A, wherever that might be? Does it change anything with them?
Yes, definitely we see change. To give you an example, in the early days when I was uh, playing around with the idea of building a platform and investment crowdfunding, and as mentioned, when I spoke to people in the industry, and I kind of, you know, let's say, smile, but say, well, yeah, good luck with that. And there was, in general, at that time, there was a lot of I think, skepsis around this too. I mean, as you can imagine, and I remember with new crowdfunding rules, there were sort of established players in the market that say, "Well, we don't need this, we don't want this," and of course, highlighting all the, let's say, the risks and the downside of crowdfunding, and why would the crowd have to be involved with investing? They don't know how that works, and so there was a lot of skepsis around it, from certainly from established parties, and it's definitely it's great to see now, actually, that you see more traditional players in the market also recognizing, like, hey, this is not something, this is certainly not a threat. It's not going to displace traditional investors. This is complementary. It's actually making the available capital pool, way bigger each year by unlocking it to essentially the public. So evidenced by the fact that, again, in the UK, where they're ahead of that, that many of the deals that go on those platforms like FrontFundr typically have co-investments by, angel investor networks or VCs. So you can already see how it's going hand in hand there. And so here in Canada, we definitely now see more openness, more interest from let's say traditional players. We actually have now deals in the pipeline where traditional investors are jumping on board or actually leading rounds. So that's great to see, and also other organizations, angel networks, but also startup networks, organization that help startups connect with investors, and they also actually really now see raising from the public for startups as a viable and an increasingly important source of raising capital. So yeah, there's definitely uh, more I would say adoption by other organizations in the startup ecosystem.
And that's brilliant. I think that over the years, I'm excited to see that this has shifted that much because when we started to dive in and learn more about what you're doing in 2016 and 17, there was a little bit of that. Well, I'm not sure that we want our startups to go here and all of this. For me, it's just another lane. It's another avenue to acquire capital. And I think when you start to look at all the different lanes that a startup founder can go to be able to build capital for their business, this is a primary example of a need. Is that if I want to build a company, I want to be able to get people excited about my brand, get excited about my business. If I can raise from the public today, then that allows them to be with me for the long journey. And I think that that's way different than just having an investor angel in and having 20 or 30 of them. And I think that's great that they're in there. They're supporting you on the business side, helping you work through it. But imagine being able to have a lot of brand advocates that are joining your business because they love what you do, and being able to buy your product but also invest in you right away at the beginning is phenomenal. I think it's a great breakthrough. If we kind of shift a little bit here, when you look at all the different ways that people are starting to build dollars and raise funds, is there a number that you say? You mentioned 40% of all startups are using this in the UK. Is there a target number and some data that you can share around where you see your model going so that can get people excited? The crowd can get excited to say, you know what, in the next 3 years, we look to be, 30% of all investments should come through some form of front funder. Whatever those data numbers are, I'd love to hear them because I think that's where the excitement really builds around what you're doing.
Sure. Yeah. So as mentioned earlier, like here in Canada, it's growing now. It's the adoption rate is increasing. If you look at the overall pool of companies that are using investment crowdfunding and raising capital from the public, right now we're still in the single digits. Like it's just a few percent. And I think now we've got the harmonized rules in place. We see it more and more becoming we see the industry growing. So for us to see this really go to at least 20% in the next 3 years will be fantastic. That means that basically 20% of the companies are actually using investment crowdfunding as a channel, as a source to raise capital fully or as an additional channel. I'd love it to be go towards 50%. And but in the next 3 years, I think it's also not. I think it's ambitious, but I also think it's achievable. Certainly, if I see now in the last year, and obviously last year with challenging markets and has been perhaps not the best year to sort of look at the growth rate, but what we've seen since the pandemic and the structural growth path we're on, I can definitely see us see us get there, and see in general see 20% of dollars being invested in startups come from the public for sure.
That's awesome because when you look at what the last 3 4 years of COVID has done is it's helped more people get educated in finance. More people are taking the route that they want to be in control of their finances. from the stock market to investing, you name it, across the platform. So I think it's exciting. To your point, there's a really big opportunity here that in the next 3 years you could be doing 20% of these and keep building on that number, because I think you're going to start to see a lot of other groups shrinking and more people trying to manage this type of investment on their own. Now, to take some of the learnings that you've had throughout the journey of the last 20 years in the finance space, working on your startup, is there anything that you would share to a founder? Because, like you said, this hasn't been easy. So, what are some of the things that you did that helped you move through this space quicker, build a brand for yourself, that you're a driver, that you're going to do whatever it takes to make this happen? And I can list a couple of things from, joining the PCMA, the other fintech association. You're doing a lot of things that support the environment around you. Are these some of the things that you would say to any founder? Look, get out there, join groups. Like, what is the real piece that makes you stand out and that you're able to actually be this first mover and being successful at it because you have pushed the envelope? Are there any recommendations you would have for other founders in this process?
Yeah, first off, in general, I mean, founders, startups, they're doing something new. They all have the ambition, the dream to change the world, and to innovate and do something new. And if it was that easy, and it would probably already be done by other companies or bigger companies, or so first off, it really, what I experience, it does come down to just being a big believer in what you want to achieve or what you want to change, because you know for a fact that if you're innovating, you're per definition, you're pushing boundaries. You have to get through certain barriers. In my case, it was, of course, one of the factors, of course, the regulatory environment. But we also spoke about other aspects, like, hey, this whole idea of creating awareness, getting people excited about this, and also believe in it. So I think you can only do that by being a strong believer in yourself, and you will meet a lot of people that will say that's not going to fly, or it's not a good idea, and so you don't want to totally ignore that and say, well, if they're not with me, they're against me or whatever. You want to listen to them, and get an understanding of, well, why do they believe it's not going to work. And usually when people say things or take a certain position, there's a motive behind it, right? So if you speak with traditional investors, well, they probably have a motive that they're not necessarily waiting perhaps for new kids on the block, right? So for them to say, hey, this is not going to fly, okay, maybe that's the reason, right? So you take all of that on board, and you sort of digest it, and you take learnings from it, and ideally it helps you to even get a better understanding of why you believe in it so deeply, and why you will be, persistent about it, because it definitely takes perseverance. That has been my experience, throughout the years. And so that I think that's all where it started. It's really, you got to believe in it, and you're signing up for, per definition, for a bumpy road, and you got to be perseverant. And then the other thing you mentioned, indeed, about organization, certainly, because we're doing something new, and the whole advocacy and education around it was so important. Yeah, to speak with connect with people in the industry through those you mentioned few associations, indeed, that I became a member of, and actually one of them I joined the board, and actively participated. You meet a lot of people, you get a lot of, if of intel, as well as you sort of were, as I worked on my startup, and it also obviously helps you to get a better understanding, and to actually contribute to the industry, right? Because you have then other influence that say, actually, what he's doing with FrontFundr, that's interesting. That's maybe something we should look at. Maybe we should push a deal to him, and so it helps you to basically uh, uh, build a position in the ecosystem. And in my case, that was, of course, really the startup and private markets ecosystem, if you like. So yeah, I think it's really important to, you don't do all this from locking yourself up in a room. You gotta go out there, and again, certainly because it was so, well, that so much innovative, and you have to really share that, and surround yourself with a group of almost other people that believe in it and want to help you.
I love that you're utilizing your ambitious, your drive, you're using all of these skills that you've learned to keep the hustle and drive yourself forward. And I love the fact that you obviously looked at it and said, I have to make some friends out here in this environment. I have to work inside the ecosystem. I might as well try and do some things where I can support it and push it forward. And it reminds me of a great story of another founder, which is very similar story to yourself. He is All or Nothing Brewery, and this was before alcohol and beer was allowed in grocery stores. So he joined every committee possible, him and his brothers, so that they could be in the conversation about
Right.
what's going to go into stores. And they kept pushing it and pushing it and pushing it. And eventually, when the beer was the first one into market, guess whose first beer was on the shelf in the grocery retailers? All or
Right.
Nothing. So very smart. And this was years before it was even possible. It's just like yourself, years before it was possible. So I think a lot of the time you have to think outside the box and figure, where can I make those connections? Where can I make those friends? And it obviously proved very valuable for yourself that over time, these are the people that are going to go to bat for you. They're the ones that are going to want to maybe even invest in you. And all of that comes from being able to understand the market, but also understand where you're going.
That's actually just that's a great comment. Just quick on that one, you said invest in you. You know, I mentioned earlier on, Jeffrey, that you have people that's in the early days. So, yeah, it sounds great. Good luck with that. And actually, quite a few uh, of those people are actually co-owners in FrontFundr. They actually invested in the company as as it when we launched when we launched the platform, right? And in fact. Uh, I've raised multiple rounds myself for FrontFundr through FrontFundr. So which is kind of a no-brainer, obviously, but listed FrontFundr on our own platform, and so yeah, and that's the whole point is that for startups, it's a way, of course, to raise capital, but it's also a way to to literally get investors, co-owners in your company that are brand champions. They have a literally invested interest to talk about you. To maybe they meet companies, say, check out FrontFundr, might be interesting for you, or to their friends, like, hey, I'm actually investing on FrontFundr, check it out. So I've always seen them not just as the investors that put money in the company, but they're also have a reason to help to create awareness, and so yeah, I have over 1,200 investors today, which for a company my size is it's quite a lot.
It's amazing. I think it's brilliant. Absolutely brilliant. We're going to transition in just a second, but there's one question that I have to dive into and ask. When you did your TED Talk, is there anything today that you would say differently or anything you would do differently in that TED Talk? I think it was fantastic, by the way. But is there anything when you reflect back and say, you know what, I should have used this stat, or maybe today I would change it to say that this regulation, I'm going to crush it because I think it was annoying, whatever it might have been. I'm just curious because you shared a great story, and I'm just always curious if someone said, I'd do this again this way.
Yeah, that's a great question. Actually, not so long ago, I watched it back, and it had been a while, and uh, it's sort of twofold because quite a bit in there still stands. Like it's still work in progress. Which uh, which also shows again, like it's taking time. Um, any part I gave some examples there that are really taken from experience with companies on the platform, and literally investors I met and started telling me about, like, hey, you can actually do that, sort of explaining the concept to me, which was a fantastic experience. I I think what one of the points there. I mean, the 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 investing in companies that you're excited about and you become part of that is one thing. I think to what I perhaps would highlight more now. I won't say it really differently, or I'd say it doesn't hold anymore. But the fact that you know. Uh, Investing in companies, it's not really sort of necessarily a one-off. In fact, it's the opposite. Like I would double down on, like, hey, if you actually, and whether you have $100,000 you want to invest in private companies as opposed to public companies, or $10,000, but if do your homework, look at different companies, and make multiple investments. Sounds like, yeah, sure, because of course you see more transaction on the platform. But the thing is that we all know like how it works with investing. There's risk, there are rewards, returns involved, and we also know that for startups, there's typically a higher risk. Let's go back to the example. If you got $10,000 to invest, I would really encourage, like, get familiar with the startup ecosystem, with typical risk involved with startups, and before you look at the video and think, oh, that's fantastic, that can only go up. Maybe say, "Ah, I like that idea, but I'm gonna look at other startups in the market as well. I'm gonna basically create sort of a, make multiple investments. At that point, Jeffrey, I think the market certainly wasn't even ready for that. It was such a phenomenon still. It still perhaps is, but I find it really important today that we're talking about, not like, this amazing company that I want to put money and support just because I like it and I think it's going to be great. But hey, this is the price. Just like many retail investors are investing in online platforms to invest in public companies or in ETFs and that kind of thing. Private markets is another, asset class, if you like, another segment where you can invest. So, look at it and encourage them to make multiple investments, spread their risk, and that's probably what I would have emphasized a bit more.
I love it. It kind of reminds me of if you're going to buy a new TV, you typically don't just walk into the store and pick the first one on the shelf and spend $2,000 and walk out and say, I just bought this TV. You'll do some research and you'll learn what all of the different types of manufacturing is, what types of things you're looking for, what things will appeal to you, your family when you're watching it. And then you'll make that decision and you'll make that investment because it's a long term, 3 to 5, 10 year investment on that. And that kind of goes very much hand in hand with when you're going to go into a platform like yours. There's going to be a lot of variety, but find the ones that you have the most knowledge on, that you feel that you will not stress out about the investment. And as you said, this diversify, put it into multiple areas, but at least educate yourself enough, deeper education on what is the industry, who are the competitors, and what's going on in the space before you make that investment. But just knowing that because you guys have simplified it, it makes it that much easier than scouring the rest of the world. You get a really good handset of information in front of you, and then you can do the rest of it on your own time and come back and make that investment or multiple. So I think that's pretty exciting, and certainly delivers to what the world needs today, which is being able to learn, make an investment, and then follow that company going forward from there. So well shared. We're now going to transition into the one of my favorite spots, which is the rapid fire. But before we jump into the rapid fire, we're going to do the 60-second spot. So the 60-second rant, this is going to be ranting about whatever you like. I will make the caveat that only one person has actually hit 60 seconds. So I will put my hand up at the end of the rant, at the end of 60 seconds. Keep going, get it out. We want it to be the best. So when you're ready to go, I'll start the timer. And like I said, I'll wave my hand when you get to 60 seconds, or maybe I'll wait a little bit if you're really on a roll. But you're ready to roll?
Yeah.
All right, let's have it. So you're on.
Okay, so we talked about regulation, we talked about things moving more forward in the right direction, but I have to say that I am still really struggling with the regulators in Canada. I think the industry is struggling with the regulators. I'm currently, if you can imagine, we can do capital raises not only in Canada but across the border, which we're actually already doing. So we're having Canadian as well as U.S. companies now listed on FrontFundr. Well, to do that, we're being confronted with all sorts of challenges with cross-border rules, and I must say I'm currently in discussions with the regulators here in Canada to remove what I see like rules that are not really serving any purpose. It's not protecting the interest of the capital markets. It's not protecting investors. It's just simply because there's a rule that your accounting standards need to be based on. I have to get a bit technical, I guess, but need to be IFRS. It cannot be US GAAP. So if a US company wants to raise a fund in Canada, they have to convert it. Makes it all very difficult. And I ask myself, why is that? What is the rationale behind it? To my mind, it's not serving the capital markets, not protecting investors. So I really, really like that remove that, get it out of the way. And yeah, the Canadian regulators need to foster efficient capital markets. So let them work on this. Let's remove this. And I really hope that we can resolve this quickly. Hopefully, they watch this podcast, so it's a straightforward request to the regulators. Like, let's just get this out of the way. I'm all for simplifying but transparent and honest capital market, and but let's remove the unnecessary red tape because it's just really serving no purpose, making it very difficult for startups, for companies that are so keen to raise capital, as well as for investors to say, hey, I like that company. Why can't they invest? So really, I need to sort this out. As I said, I'm working on it. But yeah, it's tough. It's frustrating. But I've seen it before. We got through it, so I'm confident we're gonna get this one out of the way too. I'm surprised I'm still not at 60 seconds, but I can carry on.
Oh, you passed 60 seconds. I put my hand up,
Oh,
but you were going, so it's all right.
oh
This is
shoot!
good. Yeah, yeah, no, you're doing a great job. So my counter to this, and typically I'm supposed to counter in a beat it up way, but it's very difficult sometimes to find that counter. But I will share that, regulations across the board, they have been put into place by hundreds and hundreds of years of laws and rules and regulations, and a lot of them haven't changed because nobody has contested them. So they put them in there to protect themselves or protect the industry or protect this vertical. So in a way, you have something that's protecting you, but somewhere there is a law, there is something that's out there that you have to find the gap in to work your way around. And there is a lot of great material on this form of hack, which is the world is structured around finding the loophole and working the loophole. And when you're able to work that loophole, that's going to allow you guys to move forward. And there's many different examples of how that is, but in the case of the regulators and how they've structured this, there is some form of legal loophole that will enable you to move forward, or enable them to change this. But the regulators have put these measures in just so that it creates bumpy roads and long durations. So maybe the whole point of this is that you have to look at it a different way. And maybe once you've looked at this a different angle, maybe that's where you're going to find the gap to make this work.
Who knows? Who knows, Jeffrey? I've taken it basically heads on. Regular regulators said, I'm not even looking for any loopholes. I don't think there are any in this case. Neither for any gap. I just basically, take the bull by the horn and say, look, this is what we want. This is what in the interest of everybody. What's the problem here? But you are right. Like, I'm not fighting or against regulation. We talked about it earlier in this podcast. Like, I do agree with actually the regs and rules in place. Unfortunately, the finance investing industry has proven time after time that it's actually needed. So I'm supportive of it, but not just for the sake of we need to have regulation. Sort of suggest that it's provides some sort of security or safety, or when it's not right. It needs to be purpose driven.
And it's very common that I hear this a lot, that there is rules that really don't make any sense. They don't associate with protecting the public or protecting someone's financial well-being. That it's typically just a roadblock, and it does get a
Right.
little frustrating. So I can totally understand where you're coming from. Well, either way, I hope the rant gets out to them and they start to look at this as well, and they
I
figure
hope
out a
so.
way to shore this up quicker. So we're going to move on to our next segment. I appreciate the rant; it was very good. Um, so we'll jump into the business section, which is pick one or the other as the investor. So, as yourself, as the investor group, do you typically look for founders or co founders?
One of them, uh, co-founders.
Okay. Do you rather invest in unicorns or 4 year 10x exits? And do you guys have to plan for this?
That's a tough one. Like, because I would say both, but I can't. Right. I actually would say then the second. So the 4 year, there are lots of solid businesses and 4x returns. We've seen that. Happy investors, rinse and repeat for sure.
Love it. Tech or CPG?
On FrontFundr, CPG,
Okay. NFTs or Web 3.0?
Web 3.0,
Okay. AI or blockchain?
AI.
First time founder or second, third time founder?
third time, second time founder.
Okay. First money in or Series A?
First money in.
Lead or follow?
Lead.
Number of companies invested per year on the platform or in general?
Per year, 60, 65.
I love it. Any specific verticals or it's open ended?
Typically consumer goods, so
Okay.
CPG, technology as well, but rather than, let's say, B2B, it's typically B2C. Yeah.
Okay. Two qualities that a startup needs to stand out to you.
Passion, perseverance.
Safe or convertible note?
uh, Convertible note.
Okay. The toughest lesson you've learned through your platform or off the platform when it comes to early stage investing?
To early stage investing. It's, yeah, it's tough lesson is rushing into it, not doing your homework, uh, and make a haste and over a rush decision happened.
No, it's good. I like that. Who is your mentor and why? Or hero and mentor, why?
Uh, well, it has to be the recent book about Netflix I read, and now it's great. I know the book is called No Rules Rules, and I think it's fantastic. The model of Netflix, and it's was it? I forgot his name now. But I um, founders founder CEO of Netflix, but the way of innovating, the way of driving innovation and talent and responsibility in your organization, that's incredible.
Agreed. It's Reed Hastings. I saw an article
Yeah,
on him today because they crushed their numbers. Well, they
there you
crushed
go.
their subscriber numbers, so they're still growing. So yeah,
Reed
it's
Hastings.
pretty
Yeah.
it's pretty phenomenal what they did. So big fan.
Yeah.
Is there any piece of advice that you give 9 out of 10 times to founders?
Um, we talked about already about believing in what you're doing, and perseverance talked about it. So let me highlight another one. I think you know talk surrounding yourself with people that can help you build a business. I think that's really, and that's so who have been there before, basically. I think that's really, really important. Think about mentors, think about advisors from the very beginning, and whether you all formalize that or doesn't matter. But basically, having a few people in your network that you can ask for advice, and ideally multiple. You get different perspectives. I think that's really important.
Love it. What is your favorite investment?
FrontFundr.
Yeah.
Uh, I won't say FrontFundr, but that's also one. But favorite, well, the favorite investment, apart from, I'm not talking about returns. I mean, I had actually a great investment. That was an exit in plant-based protein. It was called at that time the Very Good Butchers, now called the Good Food Company. That one was a convertible note. We spoke about that. uh, and they went 2 years later. They went public, and investors on the platform, including myself, at about 35, 40 times their investment, which is extraordinary. This is not like this is extraordinary, but yeah, it can happen. So there was a favorite investment. I have to choose one, so I'll leave it with that.
I love it. That's a great investment. Yes, agreed. What is your worst investment? And you don't have to say names, just is there a learning that you gained from this worst investment?
Yeah, it was what I said earlier. It's because you're right. We make it easy to invest on FrontFundr. We make information available. You can literally invest at your tip of your fingers, and you can invest from a first time investor in FrontFundr as little as 10 minutes. Doesn't mean you need to do that. It's not like you're buying a book online or whatever. Just take time. And so there is an investment where I didn't, and where perhaps looked at the video and said, "Okay, interesting. Yeah, this puts a not done my homework." And yeah, and it's not even where they're invested, where they went south, but it's that was take your time. We make that information actually available to enable investors to inform themselves. So please do.
If you want to list any of them or share one of the podcasts that you listen to, that'd be great just to help out the community.
Oh, sorry, you dropped out there. Um, that's what was the I listen to a news podcast. Listen to Sorry, that escapes my mind now.
Ah, that's okay. When you think of them, you can throw them back in. But
Will do.
we're getting close to the end here, so we're gonna jump into the last final questions, which are personal side. So one or the other, most famous person that pops in your mind.
Obama
Okay. First brand that pops in your mind.
right now, maybe because we talked about Netflix.
Okay. Book or movie.
Movie.
Superman or Batman.
Batman.
Fortune cookie or birthday cake.
Birthday cake.
5 minutes with Bezos or Oprah.
Bezos.
Mountain or beach.
Beach.
Bike or run.
Run.
Big Mac or Chicken McNuggets.
Chicken McNuggets.
Trophy or money.
The trophy.
Beer or wine.
Wine.
TED Talk or book reading.
TED Talk.
TikTok or Instagram.
Instagram.
Facebook or LinkedIn.
LinkedIn.
Favorite movie and what character would you play?
Once upon a time in America. So that's an older one. Sergio Leone. Uh, and what's his name? It's not Robert De Niro. It's the other one. I think it's James Woods. I forgot his name in the movie.
You're gonna have to look that one up. It's been a long time, but I do remember it.
Yeah,
Favorite
epic.
book.
The book from Steve Jobs.
Okay. Favorite sports team.
My favorite sports team, Blue Jays.
What is the meaning of success to you?
Happiness.
What is your superpower?
Just keep going. Perseverance. When going gets tough, keep going.
I love it. Breaking barriers and keeping yourself moving forward and always hustling and pushing.
Yeah.
It's fantastic. Well, I'm going to say that Peter Paul, it's been fantastic to dive into all of this, your background, and learn all about how you've been changing a market and bringing finance to the rest of the world and opening up the doors to something that's been very exciting. And the next 10 years are going to be even more exciting to where you're going with this. But I want to thank you so much for joining us today and giving us a great broad strokes view of how FrontFundr works and how this business is helping generate value across all layers of the investment world. And with that, I want to turn it over to you so that you can share any last words that you want to share to startup founders, to investors. But I turn it over to you. But again, thank you very much for jumping on the show and being a rock star. I
Well,
appreciate it.
likewise, Jeffrey. Thanks for having me on your show. I really enjoyed it. It was a great conversation, and so yeah, it's been a great time. Final remarks from my end for founders. We talked already a lot, obviously, but building a company. Sometimes say the only people that really understand me as a founder entrepreneur or other founder entrepreneurs, right? So we sort of share the pain and everything that comes with it. And I would say, on that note, for founders, speak with other founders, and I'm actually on peer group with other founders, entrepreneurs, and that's absolutely locked in my agenda. I never compromise on that because it's that moment where I meet others and can vent and can bounce ideas, and so would encourage founders to do that as a piece of advice. Speak with other founders, entrepreneurs, and of course, as FrontFundr in the marketplace on the investor side, I would encourage investors to explore the private markets, explore investing in startups. This is an opportunity nowadays where through investment crowdfunding you can invest in companies that you believe in, that you want to see more of, that you want to see succeed, and you can now actually vote with your investment dollars and invest from the very beginning. So I would say read about it, educate yourself, participate, of course. It's a really exciting space for me and
I
hopefully
love
for many other people.
I love it. I love it. Well shared. Thank you very much. And is there a way that people get a hold of you?
Absolutely, of course. FrontFundr.com is a great start. I'm obviously also in LinkedIn. I'd love to hear from people that hook up with me. Always happy to have a chat. And so go to a website on LinkedIn. Very easy to find me.
I love it. Thank you very much for the great conversation. Peter Paul, just keep being a rock star. Thank you.
Thanks, Jeffrey.
Well, that was a great conversation with Peter Paul. I really enjoyed a lot of the feedback and the direction and everything that he kind of brought up around simplifying the business model, simplifying the problem, and finding that problem and simplifying it, which was, of course, in the regulations and the security side of running a fintech and being able to allow for everybody to be able to invest through their platform. And simplify came across quite a few times, which it's pretty easy to invest through their platform. So they've really fixed that by allowing it to be simple. Of course, going through the regulations, the time it took to do all of that, and he stayed focused and stayed driven to succeed in accomplishing this because of the value that sees that it brings. And you can see when it compares to the UK, where 40% of investments are going through these types of platforms, that this is going to happen. There's going to be a lot more growth in this space over the next 5 to 10 years. And some of the other things that really stood out, of course, were joining groups, being part of the community of fintech or the area that you're working in, how crucial that is to be able to launch the product and to be able to help change with regulations is being part of it. Surround yourself with great people. I really love that because that really does hone in on how you're going to be the best at what you do. Join peer groups. Like you said, there's ways to bounce ideas by being part of other founder groups. So be part of those. They're going to help you. You can post questions and have conversations and deep dive. All of those are going to be really valuable into what you're doing. So outside of that, I want to say thank you very much for joining us today. If you've enjoyed this conversation, please feel free to share with your friends, subscribe to our YouTube channel, and or follow us on Spotify, Amazon, or Apple. Feel free to share an audio or video clip around our show, and we may include it in one of our future podcasts. You can find us on all social platforms, including LinkedIn at Supporters Fund. Your support and comments are truly appreciated. Please visit us at supportersfund.com and or startup events at openpeoplenetwork.com. Thank you and have a fantastic day.